Hey everyone, this is Terry with Futures.io, and as always, I would like to thank you for joining us today. It is my pleasure to welcome back Brett Steenbarger for today's webinar, Current Best Practices of Best Traders. If you have a question, please feel free to type it into the questions box, and we'll do our best to answer it at the end of the event. If you're watching us on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to the channel. It really helps us a lot. For trading news, events, and information, you can follow us on YouTube, Facebook, and Twitter using @Futures.io. And now, without further delay, I will hand it over to Brett, and we will get this show started.
Well, thank you very much, Terry. I appreciate it and have been looking forward to this. Good to be back. Okay, so let me start out with a few preliminary observations that pertain to recent markets, and then we'll get into those best practices, which you can see on the screen on the slide. So let's start out with what's going on in markets in 2018 so far. One advantage I have is that I work as a performance coach for multiple trading firms, and these are hedge funds, asset managers, prop firms, trading different strategies in different markets. So it gives me an unusual perspective on what people are doing well, what people are not doing well, and it also gives me a perspective of what's working in markets and what's not working in markets. And let me tell you, 2018 it started out as a very, very different year from 2017. Both on the short-term trading side and on the macro portfolio management side, 2017 was extremely challenging. Traders tend to like movement, and when you get a VIX of 9 and 10, and when you get interest rates that are being crushed, volatility goes down, there's less movement, and that creates a more challenging environment for traders. In 2018, we've seen a big change in volatility across markets, and we've seen much better profitability overall, both among short-term traders, day traders, and macro portfolio managers. One of the things that is different in 2018 that's quite relevant for you as futures traders is that part of what's changed in 2018 is not simply volatility, but rather how markets are moving relative to one another. There's a sense in the last couple of months that there has been a much greater macro coherence to markets. Now, what do I mean by that? Macro coherence means that different asset classes are moving thematically, that there are some macroeconomic drivers that are affecting rates, currencies, equities, commodities, and so forth. The rising interest rate environment and the consequent perception of Fed policy, given economic strength, has created a situation where we have had strong equities in 2018. We have had falling fixed income markets, and a perception that we have turned the corner on volatility, have turned the corner on interest rates. And so we see markets moving together in ways that were not common in 2017. A good example from yesterday's trading were the Fed minutes. They came out, fixed income promptly sold off, and sure enough, we got selling in stocks in the S&P futures. That was a macro trade, and portfolio managers I know were hitting the bids on the ES futures because of what they were seeing going on in fixed income markets. So those inter-market relationships have become much more important, and I think are relevant to you and the trading you might be doing. A second observation is that I've been using some new psychological techniques with traders to help them with their performance. One of those that I'll be speaking a little bit about today is mental rehearsal, using visualization to mentally rehearse performance to help us with actual performance. Now, this is a well-known technique in athletics and even in the trading psychology. But it turns out that most people who use mental rehearsal misuse it. They don't take full advantage of its power. I recently wrote a Forbes article on this topic. If you Google Forbes and then my name, Brett Steenbarger, you'll get to a list, see a link for a list of my articles. The most recent one is on the science behind mental rehearsal. And it turns out that this is a particularly powerful technique if we use it correctly. The key is that when we are rehearsing performance, when we are looking to change a pattern in our thought, feeling, or behavior, we have to first evoke that pattern in order to reprocess it. So mental rehearsal is not just going through your trading plan in your head. Mental rehearsal is not thinking about doing the right thing and lifting the right offer at the right price. Mental rehearsal, at its most powerful, means that you mentally evoke the very problems in trading and the feelings associated with those problems during your visualization. So an example from some traders I was working with just recently, some traders were undersizing their positions. They were trading too small.
Hey, Dr. Brett.
And yes, go ahead.
I don't mean to interrupt you, but we're having some audio interference with your mic, and it's getting kind of hard to hear you.
Huh.
I try speaking. It sounds like you're speaking far away, and there's like an echo.
Well, testing.
Okay, do it again.
Testing.
It sounds better. It sounds like sometimes when you're talking, it's like it's waving in and out. So
I'm putting the mic closer to my mouth. Does that help at all?
yeah, that's better. Okay, I'll let you go, okay. And we'll see how it goes. And just to answer the questions, there is only one slide. There are no presentations, just Dr. Brett speaking. So,
okay. How does it sound right now?
It sounds fine to me, but people are reporting an echo, and I did hear a couple of times where it sounds like the audio is waving in and out, like it's fading in and out. But
okay. Yeah, because when I tested both before when I connected and with you, it seemed like everything was okay. So I'm a little bit befuddled. I'm putting the mic close to my mouth to make sure that it's not too faint. How is it sounding now?
It sounds fine from my end right now.
Okay. Could people type in and just indicate how it's sounding to them?
Yeah, people still saying it's the same as before. A couple good. We can try. You can click on the phone call, and you can try to call in using the phone, and that might work better than the Wi-Fi than the headset.
I'm certainly happy to do that. Do you have the phone number handy?
Under your audio tab, there should be a drop down, and then it should be a place for you to click phone call, and it'll give you the information to join.
Okay. So you want me, okay.
Yeah, it didn't sound like this before when we did the test. It's definitely something that's happened in the last couple minutes that has deteriorated the sound. All right, guys, give him 1 minute. He's rejoining with the phone.
Hello?
There we go.
Okay, how is this?
Well, that already sounds much better. Okay.
Okay, very good. Okay.
We'll get going. All right, thank you.
Okay, well, I certainly want to apologize to attendees for the glitch. I'm a little befuddled by it. Okay, so let's talk about mental rehearsal. So what you do to make mental rehearsal particularly powerful is you evoke the very problems and the feelings associated with those problems that you're trying to change. So in the case of the people who were having trouble sizing up their positions, they were feeling some fear of losing money. They were also engaging in some perfectionistic self-talk that if they didn't get the best price for their entries, then they weren't going to settle for anything else. And so in the visualization, they calm themselves, they breathe deeply, they get themselves very focused, they imagine the situation of entering a trade, and they imagine having all of those feelings of being afraid of losing, of being afraid of not getting the right price, and they're keeping themselves calm, keeping themselves focused, and they then visualize themselves challenging those negative behaviors, challenging that fear, challenging that perfectionism, and talking to themselves in the right way and executing their position the way they want to. So what they are doing is they are evoking the fear, the anxiety, while keeping themselves under control, and then processing a different way of thinking and rehearsing that. Literally, that reprograms the emotions associated with the troubling behavior pattern. And we can use any problem pattern to rehearse and reprogram in this way. So it could be not something about sizing, maybe it's about frustration after a losing trade and over trading. We can mentally rehearse that. We can mentally rehearse a scenario in our personal lives where we get frustrated or get angry with someone we love. And so this ends up being a particularly powerful technique in the outcome research in psychology, and something we can use much more to our advantage than I think we currently do. And then the last idea with the preliminary observations is how change occurs. People are interested in trading psychology because they want to make changes for the better in their mind frame, in their focus, and in their actual trading. It turns out that the rule in psychological research is that we change the doing by changing the viewing. What that means is we have to see ourselves and see our situations differently. We have to reframe how we perceive ourselves in order to have new possible action patterns. So I'll give a little example of that from my recent work with people. And the changing the viewing was based on an idea that I came across in a book. And the idea was of life as a curriculum. Now, think about life as being something that is designed to teach you things and help you grow. And life puts lessons and challenges and problems in front of us. And our role is to solve those problems and challenges, learn from them, and grow and develop as human beings. Now, if you, let's say, wanted to learn mathematics really badly, you really are interested in becoming a mathematician, and you had a math teacher who gave you problems, and then when you finished the first problem, the mathematics teacher gave you a second problem, what would you say? You would say, thank you, because this math teacher is helping you learn. Well, the analogy is that in our personal lives and in trading, we constantly encounter problems and challenges. And wouldn't it change our psychology if we viewed our trading as a curriculum? It's throwing problems our way. And each of those problems is something we can learn from. We can learn self-mastery. We can learn about markets. We can learn about how to best size positions, execute trades, manage positions, how to best put a portfolio together. And so when we encounter a problem in trading, rather than getting frustrated, we cultivate the response of thank you. That life has just put in front of us a challenge we can learn from. We do everything we can in our journaling to make sure we learn from it. And we take the problems that occur and the potential frustrations, and instead of letting them multiply and affect our next trading, we develop a sense of gratitude. And it turns out in the psychology research that gratitude is a powerful formula for psychological well-being. And we know that when people have positive emotional experience, they process information much better and much more efficiently. If we can keep ourselves in a positive mind frame, we're most likely to perceive the patterns that unfold in markets. And cultivating gratitude is one unique and powerful strategy for changing the viewing and thereby changing our doing in trading. Okay, so just a few, like I say, preliminary things to think about here. Let me start out with a few of the best practices that I'm seeing among the traders I'm currently working with who are most successful. And again, this is across different firms, different strategies, but these are common themes that I'm observing among very successful traders. The first one is structured preparation for the trading day. And the key word here is structured. It was interesting, at one firm where I worked, we took a survey, and it turned out that the majority of traders, who are very successful, the majority of traders did not have a structure to their daily routines, and particularly their morning routines and evening routines outside of trading hours. What seems to be the case with the most successful traders is that organized preparation leads to more orderly trading. In other words, in having a very structured routine, think of that as building muscles, so to speak. You're building your capacity to be structured and to be orderly. On the other hand, if you had a chaotic routine in your non-trading hours, then you're really reinforcing chaos in your own mind, which will filter into your trading decisions. So the structure of preparation ends up being important. And what's interesting is that different traders prepare in different ways. It doesn't seem to matter so much what's happening in the preparation. Some people review charts. Some people talk with other traders to develop ideas. For many traders, part of the structured preparation is physical exercise, but it's the consistency of the activity that seems to make the big difference. So what we do to start working on this, that may be a practical step for you, is we take what's called a solution focus, and we take a look at your most successful trading days. When have you been most successful? Or we take a week, when have you been most successful? And we look at the preparation you did on those occasions. So we're looking at how you prepare on the occasions you perform best. The solution-focused technique means you look to your successes to figure out what you do right, and that gives you some ideas about your best practices. When I've done that review with people, sometimes they've figured out that when they're performing well, part of their structured preparation has been meditation, doing something to keep themselves very focused. There's a trader who I work with whose morning preparation involved spending time with the kids before they went to school, spending time with family, and just having a good, fulfilling time doing that ended up giving them positive feelings that they brought into the trading day. The issue is what works for you and then structuring that. A second best practice that I've seen are creative strategies for generating trading ideas. The traders that I am working with who are most successful have really unique strategies for figuring out what to trade and how to trade it. And again, these strategies will differ for various traders, but there are certain common elements. One of those that pops up in research that I've done about what makes traders successful is intellectual curiosity. What seems to work as a best practice is playing with ideas and possibilities, looking at lots of things and seeing what looks like it makes sense to you. So, for instance, traders I work with will not only look at multiple charts, but will look at multiple charts on multiple time frames. And they will look at enough charts, enough time frames that they see certain recurring patterns that are associated with opportunity. The key is looking at these different charts and different time frames in a very open-minded way and looking at one after another and letting your pattern recognition kick in. So, for example, one of the patterns recently that short-term traders have been quite successful with that did not work at all in 2017 is a volatility breakout pattern. In other words, when you see prices that start to consolidate. And we trade in a narrow range so that on a short time frame, realized volatility has gone down. In a higher vol environment, we're going to get some mean reversion of volatility. And so they are trading the breakout from that relatively narrow range. Now, in a very low vol environment, those breakouts don't really sustain themselves much. But when you have a VIX of 20 and other markets are moving commensurately, then you get some meaningful movement out of those narrowed volatility areas. And that came out as a result of someone looking after chart after chart after chart and seeing this pattern playing out again and again and again. It's also an illustration that different patterns set up as opportunity in different market environments. And so by having creative strategies for reviewing markets and seeing what looks related to what, you can develop some ideas and you can pounce on those because of that pattern recognition. The third best practice is teamwork, working with others in a team way, as a psychological strategy. So teamwork obviously can be a very effective way of processing what's happening in the markets we're trading and figuring out what other people are seeing, what other people are thinking. And sometimes you hear an idea that makes lots of sense to you. Sometimes you hear people leaning the wrong way and you realize that perhaps the majority is not going to be right. But you pick up information talking with people, both from what they say and how they say it. It turns out in the research that I've done on traders that are successful, traders who have good interpersonal skills, who can read other people very well, really make good use of interaction and teamwork and can hear ideas, discuss ideas, they hear themselves talk, they hear others talk, and they can use that information to figure out where there might be an edge, where people might have good ideas, where they're leaning the wrong way. Now, the traders who have been most successful are also using teamwork for psychological benefits, so that when markets are challenging, when the profitability is not there, they're using the teamwork to keep the morale going. They also use the teamwork as a source of motivation that is different from the P&L. When people work in a team way, they support each other, they help each other. Each, as we say in medical school, I teach at a medical school in Syracuse, each one teach one. Everyone is of value to others, apart from the P&L. And that process of mentoring, helping others, I'm seeing very successful in the trading firms where I work. In fact, an earlier Forbes article that Mike Bellafiore of SMB and myself wrote takes a look at how teamwork helps the actual learning curve of traders because of the mentoring that it affords. One of the great things, of course, about being on the Futures IO site and connecting with people is that you can create your own virtual teams. You don't have to work on a trading floor in order to experience the benefits of teamwork. In fact, there are traders who I have spoken with, including recently, who have created virtual teams and connect with others in chat, and they review the day's trading together and figure out what they did right and what they did wrong. And each person is learning from everyone else. And during the slow times of markets, they're keeping each other entertained. And that ends up working very, very well for them. Again, we can think of it as a psychological strategy for keeping that positive emotional experience. We can't always count on P&L to give us positive emotional experience. So where are we going to get our positivity from? We get it from intellectual curiosity and developing ideas, but we also get it from working with others, helping others, and learning from others. And then the last best practice area for the most successful traders, I call self-management. The traders who I work with who are less successful have what I call saturated lives. They have so much on their plate as far as trading responsibilities. Maybe they have other work responsibilities, they have family responsibilities. They feel like there's just not enough of them to go around. And so their stress level is high. They don't get good quality sleep. They don't have time for proper exercise. And all of that weighs on their energy level and on their mind frame. It turns out that in the psychology research, energy level is extremely important to overall mindset. Energy level is also important to performance. When we experience positive energy, when things turn us on, and this can be from physical exercise, it can be physical energy, but it could also be from stimulation, doing things that are just really stimulating for us. When we have that energy going, we actually perform better cognitively. In one very interesting experiment, they had people looking at words flashing on a screen very quickly. And one group of subjects, before they watched the words flashing on the screen, watched a movie that was a very happy movie. And the other group of subjects watched a movie that was a very upsetting movie. There was a lot of violence and so forth. And they had each group look at the words flashing on the screen to see how well they recognized the words. And both groups recognized very well the words that were flashing that were directly in front of them. However, only the group that watched the positive movie was able to accurately perceive the words that were flashing at the periphery of their vision, at the edges of their visual field. The people who watched the upsetting movie only saw what was directly in front of them. They didn't process what was at the sides of their vision. In other words, they had more tunnel vision. And the research team that did the study concluded that when we have negative emotional experience, we become more tunnel vision. We don't see the world as broadly. In trading terms, we miss things. I'm sure you've had the experience. I've traded myself since the late 1970s. I'm sure you've had the experience like I have, where you miss a trade and you go back in your daily review and you say to yourself, how could I have missed that? It was so obvious. But in certain mind states, we become so tunnel visioned, we don't see what is at the periphery. We don't put the pieces together because we're not even seeing the pieces. This is why positive emotional experience is so important. It helps us see a broader field. If trading is about pattern recognition, then we're going to see more pieces to the puzzle. We'll put together more patterns if we see a wider field. And this is why self-management is so important. So the traders I see being successful are managing the quality of their lives outside of trading. They not only have goals and a structure for what they do in trading, but they actively are making sure they're doing the right thing outside of trading to keep themselves in peak condition. Happiness, doing fun things is part of that. Satisfaction, doing things that are meaningful to you and fulfilling, part of that. energy, doing things that are stimulating is part of that, and doing things in relationships that bring you closer to people that matter to you is part of that quality of life outside of trading. So let me conclude, because I want to leave a good amount of time for questions. Let me conclude just with a general observation from a psychology perspective about how we develop as traders. I would argue that it's a three-step process. Among the most successful traders I work with, a three-step process. The first step is getting better. They work on some area of trading that makes sense to them, that draws upon their distinctive strengths, and they practice that, and they work on that, becoming more consistent and more consistent in their trading. And for some people whose strengths are quick, rapid thinking, they may do very short-term trading. For other people who are big picture thinkers, they may be more like macro portfolio managers, but they trade in a style that fits with what makes sense to them and what they are good at, and they practice it, and they get better, they get better, they get better. That's the first step. The second step is once they've achieved consistently, they now are involved in getting bigger. So the first step was getting better. The second step is getting bigger. Because once you have that consistency, as long as you're trading relatively liquid markets and strategies, you can build that. You can trade larger size. You can take more risk. Now, the getting better part requires a degree of humility, because you're going to make a lot of mistakes in your learning curve as a trader. You're going to try one thing, try another thing, and you're going to learn from experience what works, what doesn't work. You're going to have plenty of losses, plenty of frustration. So it takes some humility to be able to be okay with that and to keep your trading small so that you survive your learning curve. Humility is very powerful in the learning phase of trading. But then, as you develop the consistency, you ideally are developing confidence in what you're doing. You're seeing firsthand that it works. And that confidence now helps you get bigger. And you do it in stages. You don't try to jump your trading size by huge increments. You raise it by an increment, get consistent at that level, then you raise it by another increment and get consistent and profitable at that level. And that's getting bigger and bigger. And then the third step is getting broader. So we're getting bigger. We're getting better. We're getting bigger. We're getting broader. What does getting broader mean? It means developing new sources of edge, finding new patterns in markets, new markets to trade, new time frames, so that we not only become good at trading particular strategies, but now we develop multiple strategies. They may be multiple setups for a high frequency trader. They may be multiple markets where you can see things setting up in different places, but we broaden our edge. And notice what that means psychologically. This is a very important point, that when we broaden our trading, we go back to being beginners. We go back to getting better. We go back to humility. Because when we learn a new strategy, we have to do it small, and we're going to start making mistakes again. And that's part of a new learning curve. So all of this becomes a cycle. Getting bigger, getting better, getting bigger, getting broader as the next way of getting better. The best traders I work with are constantly learning. They're developing new sources of edge. And they're always in a state of humility because they're always making mistakes and always learning. but they develop consistency in their existing strategies so that they can have confidence in those and trade bigger. Okay, let me sign off here with the regular part of the talk and open us up to questions. I understand you're going to be moderating, Terry.
Yes.
And any questions you have about what I was presenting, or if you have other questions in trading psychology, I am delighted to tackle those.
Okay. All right, guys, feel free to start typing your questions, and I will start asking them to Brett. Where can we find the article about teamwork as a psychological strategy with Mike that you talked about?
Oh, okay. So that was, we did a piece for Forbes. And if you go, like I said, if you Google my name, Brett Steenbarger, and Forbes, you'll see a list of all the articles that I've done for Forbes, and it's in there. But if you would like me to dig that up for you, then my email is on that slide. It's the Steenbab, Steenbab, at AOL.com. You can email me and just indicate what article you're interested in, and I'll send you the link directly.
Okay, perfect. All right, let's see. When you talk about psychology strategies among teams, if some of us don't have a team or many people to talk to, of course you can't find that happiness or satisfaction from talking about trading. Would you say it is less worth it to find that satisfaction from something like exercise as opposed to finding it from trading?
Read the last part of that question to me. I didn't quite catch that last part.
Would you say it is less worth it to find that satisfaction from something like exercise as opposed to finding it from trading?
I see. Yes. Interesting question. I would say it's not an either or, and that you get a separate source of benefit from exercise. That's that energy factor, the stimulation factor. And so exercise, I think, can be tremendously powerful. In my own routine, I do exercise first thing in the morning. I get up early in the morning because I do work with macro traders overseas. And I alternate every third day. I will do strength workouts, so lifting. And on the second day, I'll do running. I have a treadmill. And on the third day, I have a stretching routine, flexibility routine. And so I'm cycling among those. But it's a relatively short but vigorous exercise. It really gets me moving. I find that if I don't do that in the morning, I really start to feel fatigued later in the day. So I think exercise is amazing in its potential, whether you work as part of a team or not. Now, yes, people don't work at trading firms. You don't have teams built in. But this is the great thing about the online medium. You can connect with people. One of the best things you can do is just make yourself visible. Put your ideas out there. That was the original reason why I started my blog, Trader Feed. I just wanted to think out loud about markets and psychology. And it's been a phenomenal way for me to connect with traders literally around the world. People resonate with ideas you put out there, and that's a great way to connect with like-minded people. And all you need for a team is one other person who's like-minded that you could connect with. So I do find that people don't have to be isolated when they're trading, that they can use the online chat medium to be able to share ideas, to be able to review the trading day. And I would bet you just within your community, the Futures IO community, you can find like-minded people who would be interested in teaming up.
Okay, perfect. Thank you.
In fact, Terry, I'm thinking off the top of my head here, trying to do the creative thing. Wouldn't it be great if people started a chat on your site about wanting to link up with others for teamwork?
Absolutely. And there you'll find different groups. There are whole sets of different groups that get together, there's the ES thread, there's the crude thread, there's the scalpers thread. So there's all little niches and areas that people get together and talk, and from there they start their own Skype groups or things of that nature. So absolutely.
Yeah, and you know what holds people back, Terry, is people are afraid to really share their ideas. And so they keep it pretty generic. They don't want to give away their secrets, right? And I found just the opposite, that if you put value out there and you share your ideas, the right people come back to you and share their ideas. And those are the people that you can team up with.
Absolutely. Okay, let's see what else we have. Any good resources for this visualization techniques?
Let's see. Good resources, you mean in terms of books, written resources?
I'm assuming are maybe online articles or something.
Yeah. So I wrote an article on the Trader Feed blog recently on a powerful psychological technique. It's a recent blog post. That would be a good starting point. That also links my Forbes article on the topic. And the Forbes article has some links to it. So I think that would be a good starting point. If you wanted more in-depth coverage of mental rehearsal, again, email me at the steenbab@aol.com address, and I will look up specific books, research articles, and so forth if you're wanting to go beyond what I've recently written.
Okay, how important would you say it is having a mentor in trading?
What a great question. Whoever asks that question, you get like an A+. Because that is it, man. That is really it. It is amazing at the hedge funds where I work. There's one hedge fund where I work where they brought people on, more junior traders. They brought two kinds of people on. One group, they just brought them on as relatively newbies. I mean, they weren't total newbies, but they didn't have a huge track record. So they brought them on as independent portfolio managers. And then they also encouraged senior portfolio managers to bring people onto their teams as junior people and learn at the desk as part of the team. And it was they didn't mean it as an experiment, but it turned out to be a wonderful controlled experiment, because the group that was brought on independently, that was learning and developing on their own, had a much, much, much lower success rate than the group that started out with a team where there was mentoring within the team. So typically when a young person joins a hedge fund team, they're providing some research and support for the team. They're helping generate ideas, but they're also watching how those ideas are traded. They're learning from the portfolio manager how to do it, how to manage risk, how to evaluate a portfolio. And as they learn, then they get their own trading account and they get to learn in real time, and they have the portfolio manager supervising them. The track record, the hit rate of success was easily 3 or 4 times as great when people were learning with a mentor. So I think that's huge. There are people in the trading world who hold themselves out as mentors. Some are better than others, but I think to seek that out is valuable.
Okay, awesome. Thank you very much.
Yeah, I'll mention something, and you know what? I don't work with individual traders. I only work with trading firms. I don't market myself. I don't pitch things. That's just not me. I've never done that. But I will mention, I'm not getting any kickback for this, so yeah, I'm just mentioning it. I know that the SMB group that I work with is starting a futures desk. And the person who's coordinating that, Merritt Black, I think does a nice job of mentoring. And if someone were interested in that, they could email me and I could give them information about that. But the key is to research and make sure that the mentor is really teaching the kinds of things you want to learn and that are relevant for your type of trading.
Okay. Would you say that having a proper account size gives you a necessary peace of mind in order to start trading? Is this a absolute must-have?
A proper account size. Well, it's a good question. And here's what happens psychologically. People start with too small an account, but they're still hoping to make a good amount of money from their trading. And as a result, they take way too much risk. That's a very common scenario, particularly with beginning traders. And so having enough account size so that you can have losses, you can go through your learning curve and make all the mistakes and not blow up, that's really important. It is like starting a business in a sense. You have to survive that initial period. You have to have enough capital, enough resources to survive the learning curve. So I do think that aspect, yes, it's important to have a proper account size.
Any suggestions on overcoming feelings of regret of missing a move, regret of entering a trade too early? I'd probably call that fear of missing out.
Yes, I've heard of that. So the regret factor ends up being a pretty powerful negative influence for many traders. I was speaking just this morning with a trader about this very issue. And regret often is a manifestation of self-criticism. So think about how you talk to yourself. Think about how you treat yourself. Many times, if we miss an idea, or we're too small in an idea, or if we lose some money, we can become our own harshest critics. We can blame ourselves and get frustrated with ourselves, and that shows up as regret. And that can put us in a mind state where we're not doing our best pattern recognition, and that can mess up our subsequent trades. The approach that I take is that, of course, you're going to miss certain things. You're not trading 24/7. You're missing some things that are happening in Asia and Europe. If you're trading in U.S. hours, you're missing some things that are happening in certain asset classes. If you trade only others, you're always going to miss certain things, and that's okay. If you miss something that you should have gotten or that you could have gotten, then again, we want to recycle that as a learning experience. Why did you miss it? Were you in the wrong frame of mind? Were you not looking at the right things? I had someone sending me their journal, their trading journal recently, and they became so focused on one particular thing they were trading, they didn't notice what was happening in another market, and there was a great setup that normally they would be looking at. And so we had to figure out, well, why were you becoming overly preoccupied with one thing and losing your flexibility? And sure enough, there were certain triggers that led them to be over-focused. And so now we're working on that. That becomes a goal that they're working on to stay open-minded during their trading. So we turn problems into solutions. We turn problems into learning experiences, and that really dispels any frustration. You want to talk to yourself, treat yourself in a constructive way, not a self-blaming way.
Okay. How do the best traders remain focused throughout the whole day? Or do they even trade the whole day?
Yeah, some do and some don't. There are different trading styles, and that's part of what's so interesting. I work with some day traders who are trading very frequently. They're trading, very, very short term. They're incredibly quick in their decision making, and they can sustain that focus all day long. To me, it is unbelievable. I personally do not have that degree of sustained focus. That's a cognitive strength. It's not a personality thing, and it's not even a trading thing per se. It would be the opposite of someone who had attention deficit disorder, ADD, someone who is able to sustain hyperfocus. And some people do have that as a strength, and I think they can use that to trade throughout the day and trade short time frames. There are other traders who don't have that hyper focus and who are not super quick thinkers, but they see bigger pictures. They see how things line up. They can relate one thing to another thing to another thing and put the pieces together in a puzzle. And they tend to trade over a longer time frame, and they see opportunities more occasionally, so they're not necessarily trading actively throughout the day. I have some traders I work with who are quite successful, who basically only are trading during the morning and late day hours when things are most liquid. And during midday, they're working on generating ideas, and they're taking a break and doing some exercise. So it really varies by your trading style and what and how you're trading.
Okay. Let's see. I'm sorry, I had one, I lost it, and I'm trying to find it back. I'm sorry, every time somebody types, it moves the list down, and I lost my spot.
Sure.
Where did you go? There was a couple questions about paper trading and sim trading.
Yeah.
And I want to make sure I frame this correctly. You mentioned before it's better to practice on a simulator before going live. If one has acquired the skills to be profitable on a simulator with the right strategies, why is it so hard or so difficult to pull the trigger on those strategies when you're in real time live? Or even if one pulls the trigger, one takes small profits only to see the product moved higher in the anticipated direction. It sounds like they're excellent in simulator, but as soon as they go live, they have that, the real money issue of not being able to control.
That's right. And that's why simulator obviously is not enough, but it's a great learning tool. And it's great to make all your mistakes on a simulator, the real rookie mistakes, and learn to see how things move and learn how to enter and exit positions. The simulator is really helpful for that. Now, once we go live, it's a little bit like an actor or actress who has been rehearsing for a play, and now all of a sudden it's opening night on Broadway. And so the butterflies come. It's called performance pressure or performance anxiety, and that can really interfere with decision making. And so what we need to do is deal with those butterflies, deal with the anticipation of going live and having P&L that matters. That's why when we make the transition from a simulator to live trading, it's very, very, very important to do it with tiny size initially, so that going live isn't a huge change from simulator. So it would be like if you've been practicing a play as an actor or actress, and then you go to a dress rehearsal before you go actually live. So you're creating a situation that's a little easier that moves you in the live direction. By trading very small, you can make mistakes and acclimate to those. This is one area in making the transition to trading live where that mental rehearsal technique can be very valuable, because you can mentally rehearse as part of your preparation for trading, getting stopped out and having a series of losing trades. If your hit rate is, even if it's 60-40, 60% profitable trades, 40% unprofitable trades, well, the odds of 3 straight losing trades, over 6%, so if you're trading frequently enough, you're going to have runs of losing trades simply due to chance. And so you want to mentally rehearse those scenarios of getting stopped out, feeling crappy about getting stopped out, but calming yourself, focusing yourself, talking to yourself constructively. What did you learn from the trade that didn't work? Maybe there was something you misread in the market. Maybe there's something you could have done better in terms of your entry in the trade, but you take away a learning lesson if you can, and then you mentally rehearse going back in a constructive way to the next trade. And so you're rehearsing the live situation mentally as a way of preparing yourself for the actual transition.
Okay, I think this next question segues pretty well to that. Can you advise on what to do psychologically when you have a string of bad trading sessions? Should one step away from the trading day or week, or how would you overcome a string of losers?
Yeah, and like I said, strings of losers can happen just randomly. It doesn't necessarily mean that you're doing anything terribly. So it depends on the context in which it occurs. I know in my own trading, there are times where I've had strings of losers and I realize I'm not seeing the market well. This isn't making sense to me. And whenever I have that feeling, it is always extremely helpful to step back from trading, observe, and get back into seeing patterns and making sense. And so sometimes the strings of losers means that there's a change in the market itself. It's moving differently. Maybe it's broken out of a range. Now it's more trending. Maybe the correlation to other markets has changed. Maybe a news item, in commodities, some news-related item has created shifts of flows. But something has changed and you're not in sync with that. If you have that internal sense of it not making sense, it's great to take a break from trading. If you have just a random set of losing trades, one of the great advantages of not oversizing positions is that you can manage to have one losing trade, another losing trade, another losing trade, not draw down tremendously. You can quickly clear your head, wait for a high probability setup, and go back in with confidence. What really hurts people is not so much the fact that they have one losing trade, a second, and a third. It's that they may oversize those positions so that they've dug a hole and now it makes it hard to take the fourth trade. So the risk management piece is really important here.
Okay. With regards to strategic preparation, any trade journaling habits that stand out of the successful traders you encounter?
Yes. One of the things, and I believe this is in the article that I did with Mike Bellafiore, is we've created a daily report card for traders. And this has been huge as far as helping people with performance. They write a report card at the end of each day. Now, these are people trading the day time frame. So this may not apply to all traders. I think traders who are trading more a swing way could do a weekly report card. But the idea is that they do a report card. They track what they have traded and how they have traded. And they track what they've done well during the trading day. They track what they didn't do so well, and then they use those observations to create goals for the next day, and they use those goals to create specific plans for the next day of what they're going to do to improve their performance. Some of those goals and plans might be about continuing to do something well if they did it really well today. Part of it would be correcting certain mistakes that they made today. If they missed a trade or if they didn't trade it well, what would they do tomorrow to correct that? And what they do, and this gets back to the teamwork issue, what Mike and I talk about, is that when people on the team write their daily report card at the end of the day, they send it to Mike as a mentor, they send it to me as a coach, and they send it to every other member of the team. So everyone is getting everyone else's report card. It's huge because everyone now is learning from other people's experience. One day of trading by 5 traders becomes 5 sources of learning. And so, again, if you team up, even with one other person who's like-minded, as we discussed, you could implement a daily report card and review, share that with each other, give each other feedback, and that really enhances the learning process.
Okay. What are the best techniques and resources for getting better, especially for a relatively new trader, say less than 6 months in the game?
Okay, so I'll use an analogy here. So I work with medical students. I teach in a medical school in Syracuse, New York. And so how does medical education work? Well, your first couple of years, you learn basic sciences. And then in your third year, you start doing clinical work, and you have what are called rotations. And so you'll spend, let's say, 6 months in family medicine. You'll spend 6 months in surgery, 6 weeks, 6 weeks in surgery, 12 weeks in internal medicine, and so forth. And so you're trying different specialties. And the reason for that is that certain specialties will really speak to you, and certain ones absolutely will not. And that's how you figure out as a physician what you want to specialize in. The same process is very helpful for traders. In your first few months, try different markets, try different styles of trading, see what speaks to you, see what makes sense. And that's why working in a simulator can be so very helpful, because you're doing it and not losing hard-earned money, but trading, day trading, swing trading, trading a market like CL versus trading bonds or trading stocks. These are very different markets. They move differently, and they are moved by different factors. And so people will get a sense of what resonates with them, and by trying out different things. And then once you find what makes sense, and again, mentoring can be helpful for this, you narrow your focus, and that's the getting better part that I mentioned. You then work on just 1 or 2 types of trades that you've seen again and again and again, and you work on becoming consistent at seeing those and then trading those. And then once you've built that consistency, then you can start to get bigger. And once you get bigger, you can start to think about getting broader and looking for other sources of edge. Where mentoring is really helpful, and certainly is helpful in medical school, is that you can see how an experienced person is doing it. So when I went to graduate school in psychology, there were supervisors who were psychologists who operated with different types of therapies. Some were behavioral therapists, some of them were cognitive, some of them were psychoanalytic. And I got to learn from all of them and observe what they do, and they observed me. And I figured out my own style by watching how the experienced people did what they did. And first I copied them and figured out what they were doing, and I got reasonably good at it. And gradually I started to integrate some from this professor and some from that professor. That's what can happen in mentoring. You'll observe different traders doing different things, and you'll copy them in your early learning, and some of it will make sense to you, and you'll get good at copying it, and then you'll start to make it your own. You'll start to copy other things from others and start to blend those. That's what can happen in those first few months.
Okay. There's a question. He says, when I'm about to place a trade, I find listening to other traders confuses my trading decisions and placing my own trades. So how do you go about not being distracted by those people that you might have around you and not allowing them to interfere with your trading strategy?
Yeah, that's an interesting question, because again, people have different cognitive styles and different cognitive strengths. And so some people actually do work best when they are trading in isolation. They benefit maybe from sharing ideas before trading hours and after trading hours, but while they're actually trading, they need a high degree of focus. And so I work with traders who wear the noise canceling headphones and blot out everything around them in order to maintain their focus. I also work with traders who work in separate offices to do that. There are other traders who really do benefit from the flow of information back and forth, both verbally on a trading floor and on the trading screens with chat. And that helps them see what other people are seeing and get a sense for opportunity. And those are more interpersonally connected people, and that works very well for them. So different styles for different strengths. It's not uncommon that more analytical people, the quants that I work with, for instance, I work with some quantitative traders, often work best when they have a good ability to filter out other people and other things. They're really focused on their research, and they will separate themselves from others for that purpose.
Okay. We're getting close to time, so I'm going to make this the last question.
Okay.
Any tips on organization for the ADDers? I get hyper organized and focused, but then fail to maintain it, and I get sloppy again. #cycle.
Yeah. So ADD is a really interesting thing, and there is good research on medication help for that. And so if someone actually gets some help and is diagnosed with ADD, I really do encourage them to look into that. It's helpful not only for kids with ADD, but adults. And there are different medications. There are some newer ones on the market that can be very, very helpful. And I work with traders who make use of Concerta and other medications like that. So that's one possibility. There are also some biofeedback devices. If you Google biofeedback for ADD, there are some devices that train you to maintain focus and that you can use actually to teach yourself to keep better focus. And those have proven helpful for kids with ADD. So that's a possible area also. Other traders I work with who have some attention problems, maybe it's not a total diagnosable ADD, but they certainly have attention limitations, they will trade in bursts. So they will trade actively during opening hours, let's say, and they'll maintain focus, and then they take a break and they clear their head and they renew their focus, and then they'll trade in a second burst, and then they'll get away. So they trade just during periods when they can maintain their focus. They don't try to sustain focus throughout the day, because to do that would so tax them that they would end up losing focus and making bad decisions. So you can adapt your trading style to your degree of focus. Okay. Certainly swing trading would require less sustained focus than the kind of rapid day trading that some of the people I work with do.
Okay. Thank you for the webinar today, for taking questions, and for spending some time with us this evening.
Oh, yeah, I appreciate your inviting me. My email address is up there, the steenbab@aol.com. Please feel free to ask questions, or if I can provide you with any other resources. And I put the URL for my blog, the Trader Feed blog, which has now about 5,000 articles that are archived on trading psychology that I've written since 2006. And so if you go through those and the index for those, I think you'll find a lot of interesting and relevant information that might help you with your trading.
Awesome. Thank you. You have a good night.
Okay, you too. Thanks a lot again.